There are many more things happening across. I'm sure you are being aware, you are being known, but we don't give a focus. I'm going to give all the examples of our customers and personally writers about Right Horizon itself, that how we should not go. It's better to be a safe than sorry kind of it. So I have known people. I know one of the customer I know. It's like she told me she is when she was finished her CA, she was a number 2 rank in India, and she had got scammed, and 40 lakhs has become zero. So I'm saying the people who are very well educated, it's not that okay, people who are not educated, not thought of, not done this, it's been able to do. I have another person who a very good friend of our Europe head of one of the leading IT company. And he says, yeah, I knew that person. So I gave a person's trade for 4 CR. And I was telling how you can give 4 CR to somebody who is not having the amount in your demat account to play around, and then he is still going on a grievance, he's going on a SEBI because he didn't do anything legally. Now you can't do it. So even the cases are going on. So my thought here was how to make your investment safe. So when I'm talking about safe investment, I'm talking about investment as a diversification. Going to talk about asset allocation. But my intention for this is how to make sure we should learn something from others, not to reinvent the wheel. And that is my always thought of. There's no sound coming, so Sudarshan is saying. Sanjay, can you hear us?
Yes, yes, ma'am, we can hear. I think he is having any issue with this probably.
So I'll start my webinar on this, and that's what my thought is. Even if I'm able to save one person out of any of the scams, because 2 weeks back I was able to save one of our close friend. She was applied for a Canada visa for the going for higher studies in masters, and they are using the one of the education counselor, and that counselor said, okay, you have to pay fees to us and we will pay to the college. And they called me and I said, I have never heard in my life somebody paying the college fees to the counselor. And I said, no, you don't do it. And then of course we knew somebody in Canada, we knew in the bank, we found it out, and it was a scam again. So I'm not saying everything what we do is a good clear or scam, but how we can start learning. I'm going to have many more experience of the people who are been doing this. It can be travel, it can be education side, it can be the investment, how people if you notice last few slides, I'm going to say, I'm not saying that influencer are right or wrong, and I believe everybody have their own ways and things, but how SEBI has been trying to ban them, how SEBI also trying his own best way, but of course nobody can stop the content level, and that is what I'm going to speak much more in this webinar. You're able to see my screen?
Yes, ma'am.
Yeah. So as I said it, the topic says is how to be safe while investing, and I gave the background. The reason is how not to come into the prey of the people who are being doing. And it's not this. Even my mom, I remember. I don't want to name the bank. It is they get caught because by emotions we are like that. And I am trying to say, whenever you are investing, wherever you are investing, you have to ask few questions yourself. And I always tell people, I will not say somebody missold or somebody did. Why you didn't do the homework enough? Because I'm going to give you example, and later on, a person has given a money for it from a GPay to do the investment, and then they are struggling that we those are the scams. So these are the things we should realize how we can store it. I have a few customers who are the AI head of a bigger companies, and they were saying you will surprised to know that these happening 1 billion plus per day scam. And is it online is good? Everything is good, always in a moderate, but how the cybercrime is going so high, how the AI is going very high, how people are misusing, those are the things which is making very scared. So I'm not saying we should live in a scared life or something, but yes, you should be very careful. That's what my intention for this presentation, and I'm trying my best. I'll be happy if you can share your own experience, or You can let me know how best we can do, because this presentation I have made from all the people who have been telling me what problems they have been going through, and I wanted this happen that people don't go into the same thing. So what is a risk management? I'm going to give little bit example on the risk management. Build a smart portfolio, because lot many customers on an average I meet at least 2 to 3 new customers, and that is the beauty of this I can say job, and which I love the job, because it's not that you make money or you make other people's money works. Of course, that's a byproduct of it, but you meet a lot of people, and that's where you learn every day, and that learning you're trying to spread with everybody. And then the last but is not the least is save but not the sorry, because that's everybody's hard earned money, so we should not just give it off without even going more details. So part of it, it's always says that key, what is the risk? And a lot of time people comes and tell me, it is Rachna, risk. I wanted a higher risk, Rachna, and I'm okay to take whatever risk you want, but you give me the higher returns, because risk is proportionate to the returns. But sometimes we have to realize something very clearly. High returns doesn't mean high risk. Because high risk doesn't mean high returns also. Sometimes high risk can make you zero returns. And that is the one thing which you all have to start thinking about, because risk is a perceiving notion where we are saying the risk is uncertain event which may occur in the future. We are not sure, it may happen, may not happen. So it's like known risk versus a known risk. Risk is to prevent and delay the achievement. So whatever we know how to happen. So I'll give you example, which is my all-time favorite. You are going for, or maybe it's a office, or maybe you can go for a business, or you are going for the wedding or some other place, and you are sure that it will take 1 hour as per the Google. Just in the morning, I was speaking to the person who has come from Delhi, and I said I went last month for the US visa. And in at least in Bangalore, I do that. Whatever Google says, I add around 15-20 minutes and I go. And that's what I did it in Delhi also. And I was very surprised. It took 1 hour instead of 1 hour, 15 minutes, it took 2 hour plus. And I said, yeah, that is, I never knew that it is going to be double the amount what Google saying. And on the way it starts, he says, no, that's very common in Delhi. I said, okay, I was not aware. So risk is most of the time we don't realize it is we take in day-to-day life. When we are getting late, most of the time you say, okay, how to see the shortest route, how to make sure that we can go faster. Is it I wanted in a metro, or I wanted the rush should not take the predictability. Same thing he told me, if you were going for visa, yeah, you didn't take it metro, because you're sure the metro will go in the same time, even it's little longer, but in the road it is not. So, small things we have to start thinking of, how we see today's day to day risk, and how we can try to manage the same thing in our investments. So, what happened when we are going in a flight, and you will see suddenly turbulence is coming, correct? And I'm sure most of it or all of you must have experienced this. Is it I jump out of the flight? None of this does it. Why? Because that is not the safest thing for us, and for anything it's not allowed. So what you do, they will say that the announcement comes, okay, you tie your belts and make sure you are not walking, you are not going to the toilet, you are on the seat, please tie the belt. So same thing happen in investments. Whenever the turbulence comes, you don't have to skip the lane or you go somewhere and do that. Sit tight, that's what we people say, because when you're sitting tight is the best way of balancing, and make sure that it doesn't impact, because that time also will go and it'll take care. So sometimes the risk has to be understood very clearly. Start imagining your risk on how daily basis you take. Is it you fast, at least I know Bangalore route you can't do 120 speed, but if you are late, what you do, you will just go and personally, I do the same thing. I'll try my best to reach 15 minutes early. But even if I am not, I will just call or SMS that I'm getting late. This is my estimated time. I'm sorry. So you are not risking on the speed that, okay, this will happen. And, but you will be able to take care in the future that, okay, I'm keeping a buffer and doing it wrong. So I want you all to understand the risk. It doesn't mean that if I'm going at the speed of 120, I will reach safely, I may meet with accident and I may die, or I may have a fracture also. So you have to know how you take care of a risk on the day-to-day basis, and the same thing apply in the, I can say, in the investments. So risk management is a very, very common thing which I can try to explain is that you see how you can confirm what kind of strategy doing. So one person told me, no, I look at short-term returns, and it is a very nice analogy somebody did to me, and I was surprised because they came, that this PMS is giving me 60 or 90% return in 1 year. I said, wow, that's nice. So you go ahead. So he says, why you feel so and all? Because I said, I never see any returns less than 3 to 5 years. I don't believe it in 1 year. So I said, okay, let us do this PMS returns, compare apple to apple. So I went 3 years back. So I said, okay, if I have 100%, 100 rupees, they have done a negative of 50% in 2 years. So indirectly, I got it 50 rupees. And I came back again to 100. So you're just looking 50 to 100 where you came back to the same basics, which is 100%. You are not looking the 3 years when you have done minus 30 and minus 20 plus. So sometimes people are looking very short sight. When you are looking as a strategy, there's a tactical versus strategical kind of it. When you're looking strategy, you always look for a long. You cannot say, okay, -1 and -2 years is this. You have to see minus all the years, 3 years or 4 years, whatever, 5 years, I look normally 5 years, that how that fund has done. And sometimes percentage is a very, very wrong way. It's always better to do absolute also, that 100 rupees become 50, 50 become 100. You are back to square one, but you're saying I'm 100% increase. So whenever you're comparing, you should do long term and try to do identify the and assess the risk. So most of the time, it's again known risk versus unknown risk. We should always do it when we are trying to do what we can give guarantee or not. So today morning when I was walking, somebody told me, Dashna, that person is giving a 22% returns. Can I go ahead? I said, I don't know about you. I will not recommend, but I can tell you it is not going to happen. There is nothing called a guaranteed returns. When you're talking about guaranteed returns, 99.9%, it should be backed by the government bonds or a government bond deals. That's the way it is. So that's nothing else is called a no risk. There is always a low risk. So other than the you take a PF, PPF and all of them, they are buying the underlying is the government bonds. And what is government bond yield? It is 5.7 and 6%. So if somebody takes a little bit like an FD or you take an insurance and everything, they can give you guarantee of 6 to 7% returns. If somebody is telling me 22% without fail, I don't. So stick to the concept. Concept never fail. If you take a research of 200 years back or 200 years now, it's going to be the same. So that nobody can tell me that it is guaranteed product of 22% or whatever it can be. So somebody came and told me that Rachna, this bank is giving me 14% return, which is cooperative bank or something. I said, okay, it may be good, but you have to understand the simple formula of bank. What bank does? They have only two work. One is lending and one is deposit. If my deposit is giving you 14%, means lending is more than 19 to 20%. So normally they give 4% plus things to give a lending. So 14 plus it. So if somebody is giving an 18% lending, what is the result in your view that the NPA will happen? And how they will be able to pay? So the intents may be good, but may not be able to pay because 18 to 20% giving a lending itself is a very high rate. So these are the assessment we have to do it when you are looking across your portfolio. Challenge and evaluate the control. So this is the another things. Lot of time I have noticed and seen people, they take so much risk or they just be very conservative. So both doesn't work. You have to be very clear. Very recently, somebody came to me and told that, Rachna, I wanted to do you financial planning. I said, yes, I'll be happy to do. Why don't you help me out? I said, okay. They gave me the detail. Huge portfolio. It's not that no less portfolio. I can say in a two-digit crores portfolio, maybe 10 crore and above two digits. So, and 95% of the portfolio is in a fixed portfolio. Have a very good real estate, PF, PPF, and insurance. That's it. Now he has to just pay 20 lakhs. I'm talking about 20 crore versus 20 lakhs kind of scenario also. Doesn't have liquidity. Is it a risk management? 100%. I always tell a person you should have minimum 40 to 50% liquidity, that in any time you should be able to sell and do it. But Rachna, I don't know. I feel that's what I have learned it from my parents. So I said it is fair enough, but the era of your parents and us is totally different. That time physical assets were giving a importance. They were feeling that okay, I should have a house, I should have a PF, PPF, and FDs, because that time PF, PPF, FDs also was giving 12 to 14% returns. Nobody was having 30% taxations. They were able to do that. But now, how you will manage it, the challenge and evaluation of the control has to come very clearly. How you can have a liquidity, what is the percentage of the liquidity, how you are dividing your all the assets, depending on those things, we should do that part. Take action. Now, this customer, I said what you should do. First, please try to reduce your real estate exposure. Please reduce. Of course, trends also says that nowadays, but I said please start reducing and make your liquidity part of it. You don't have an emergency fund of even 50 lakhs and 10 20 crores. What you will do? So sometimes those concept has to be very clear, and make sure you take an action. Monitor the report minimum at least once a year, and I always say maximum twice a year, because too much watching is also not good. So there is a one girl who's very young girl and came to me. um, I love meeting because I go for a lot of colleges to teach wealth management and financial planning kind of it. So everybody comes. So I have a very favorite question, which I don't know market. I never follow the market. I follow the normally the services. Anil Rego, who is the founder and CEO, he do the fund management and man do. So they'll come and tell me, Madam, why don't you tell me some stocks will do 2x or 3x? Okay. And I have a very nice mind. Inside also I laugh, and there also I laugh. They said, why? I said, if I knew how to make 2x or 3x in every year, why I should come here and teach you? I will be next to the Mukesh Ambani or somewhere. Somebody has to understand the basic concept. Nothing comes quick. The quick is not the correct way. Yesterday itself, I met that guy. He lost 48 CR, 48 lakhs, because somebody told him in the telegram saying that if you join, we will be giving you 2 to 3x. And he gave. And when he gave that amount, now nobody is picking the phone. And he doesn't know where the money is. So these are the risk management when you are looking on a daily basis, investment or whatever it is. Please try to understand the concept, understand those people, and make sure you're giving to the right people money. Of course, this I'm just trying to say this is a similar thing which we call identification, assessment, mitigation, monitoring, and communication. The same thing I have put it in a faster way of this. So this is the two nice picture which I loved it. As risk management need to be style of thought. People sometimes don't think, because I have noticed it is not the educated versus uneducated. I felt the thought process is not that. Thought process is too much like a another customer came to me and told Rachna, I got a product which is giving me 45% returns, and why I should invest in yours. I said, that's nice, very nice. Why don't you give? So the best pay for me is I always ask the data, and you can be sure whoever has given me data till date, whatever they are saying, it will be one third what it is actually, because nobody see the data, and I love the data. So I said, okay, give me the data. I will analyze and let you know, because anyway, your data, I'm not doing anything. I'm just analyzing it. And then it came to know That was an absolute return in 2 years. I said absolute return and R fund itself is giving 35 when you're saying absolute here is not even 20% coming. So then I asked him what he said to you. He said, no, he just told the return. And I was telling, this is the another level of communication. He didn't tell the truth, he didn't tell the lies. It's a return, it's a return. He never said it is annualized return. He didn't say it is an XIRR. He just told it's a returns. He didn't tell it is in a 2 years or 3 years what is the returns. He just told that is a return. So you all have to realize when you are investing, when you're hearing what you are talking. So somebody told me very clearly recently again, I was doing a capital gain, Rachna. I have a fund. My real estate was actually purchased in around 5 lakhs. And then I have selling approximately, I don't know, it is 1.4 or 1.5 CR. It's given so much. I said, wow, as a person, what I will do? I have started doing the XIRR. I said it was very pathetic. It's not even giving you 11%. And you are saying it is just so much. So the mind always says on absolute. But sometime when you start doing an yearly, I said market is given 14, you are not even 11. So you have to start thinking differently, and the thought has to come. And my today's webinar is to just make you think. That is the difference. I'm planning to have it even one person start doing that. So there are so many categories of risk. So reduction in the funding is the another things which I wanted to put. Failure in safeguard the assets. This is the second which I will take at asset allocation and diversification. Poor cash flow management. Very, very highly issues in the, I can say, youngsters. Um, Very good person joined recently, earning 18 lakhs fresh year, but no money. And I said, what you do? Because they keep borrowing more money than what they earn. And that the chicken 29.99 keeps going like that. So, personally, cash flow management is different than what your investment management. That's the one thing you have to realize how the money comes and how the money you should pay and how you can invest is very, very important. So, it's not necessary that if I have a, let us say, travel once a year, and once a year you will not get that bonus or something extra in that month. You need to manage the cash management there, that okay, I'm saving every month maybe 10,000 rupees, then 1.2 lakhs or I can go for a travel. Lack of value of money. So today was another the best pay for me, and one of the learnings is also from our walking group, because all of us are very diverse. So I can say businesses. We are five of them. 10 people we walk, and they were saying ki, there is another person, I didn't want to name it, and again he Rachna have 18 car, the best, you can say Porsche, you can say Lamborghini, you can say whatever the biggest car of that. He has the biggest brand of everything. He took the money from the best of the breed in Kormangla because he took the house there and on. And he made the portfolio of 1500 crores. Everybody was happy. 2 years over, and he has just taken the money, and now they're asking there is no money. What he did, he just declared his company NPA and then left. There is nobody can put the case. So sometimes a person who is a distributor or a person, one is you start understanding your value of money when you are spending. This another customer purchase a car of 2 crore and he says, I said it's nice when your passion and goal is, but do you think when your portfolio is not even 20 lakhs, you are going to buy a 2 crore car? He says, no, my neighbor have 10 crores. I said, the neighbor is not going to give you the money when do you need it. So you all have to know and understand what is your cash flow and accordingly how you have to value the money. This debate keeps going in our people, because our walking group is from a lot of Jain and Marwadis, and this is, oh, their wedding is around 4 crore, 5 crore, 10 crore, and all. And I said, why somebody should spend so much money in things you can give? They will at least do that part of it. Then I said, it's not that you have money or not. but sometimes it doesn't allow me to think that I should spend 5 crore of money. So that's a value is for each and every. I'm not saying they are wrong or right. Of course, they have money. Like a, I was reading just now recently that pre-wedding they spend it Reliance around, I don't know, 1,500 crore or 1,600 crore, and the wedding is going to be 10,000 crore. So of course you have money. It's a peanut for them. But if you have, you decide what is good. Fraud and theft is the very highest, which I'm going to help it here quite a lot of time. I'm sure you must have heard that people are been calling that I'm from FedEx or I'm from Courier, or you have a case against gone to the Supreme Court or something. Please come, and they have been asking. Poor budgeting is the last but not the least, which I'll take it. But yes, how you can reduce the fraud and theft and scam, that is another thing which I always tell, at least I follow that. I normally don't pick the phones which is unknown saved number, or I have always a true colors, which is the, so most of the time if somebody calls, I always says that, okay, you write a WhatsApp to me and I'll get back to you. So that's another way how to make sure that all these scams or anything is asking you. This happened to our son itself, and I knew it is a fraud, but I want him to learn for his lifelong that what people say is not right. And he wanted to invest in, I think so, crypto around 2.5 years back. And he says, you don't know Amitabh Bachchan is doing that. He had this all celebrities' name he was giving me. And he says that they are endorsing, then you don't understand. So for them, anyway, the mother doesn't know anything. So yes, I am the listening side. And I said, okay, I don't know anything. So they said, okay, Mama, you're not giving money. So we give him a money 15,000 for an year as a pocket money. He said, okay, I'll use my pocket money and do that. And I asked Anil and I said, you know that it is going to be a fraud. But he says that's a lifetime learning he has to do. So it's okay. So we told him, okay, you try to find it out more detail where they're doing what portal and all. Of course, all was non-Indian and they were having, but those people get so much, I can say, attracted because so many celebrities was giving, and they all were saying that I will be able to make a double within a 2 months. That's what he told me. And I think so. You all know the answer. What must have happened after 2 months? There's no money came. And when it happens for the people 10 to 15,000, you will not go to the police also and other, because that time, money, and effort of yours will be much more than the 15,000 bucks. And like this, how many people they are being chasing? And then too, he was a minor. And that was another league. I'm trying to find it out from the schools. I'm trying to do value of money for the school when I go and do it for few schools. That sometimes it's so scary that forget it value of money, these scams are happening for the minor, where they know that they have a rich and parents will give 5 10K, and nobody will go to the fight for a 5 and 10K, and that's the way they are collecting, and lot of issues are happening. This is, of course, it's a concept by itself, that how you have to do diversification and asset allocation. Very, very important is, sometime we know that sometime equity does good, sometime bonds, sometime gold, and sometime real estate. So you have to make sure you diversify and you take care of an asset allocation also. So diversification is within selecting the investment. Different asset class can help you to reduce the portfolio risk, and there's a negative correlations are always there, like a gold and equity is a reverse correlations, like that we should always do. So you can diversify across asset class, within the asset class, and across countries. Of course, family office is going quite a lot, that multi-country multi-currency kind of option, but top two is always available within anywhere part of it. Why we should do those? Because at any moment you will see that one thing doesn't always perform, some or other things has been performing. So you will surprised to know the top three of any schemes in any year will be either bottom 10 or bottom 20 out of 100. So it's not necessary. I keep telling people that when you are driving, you always use the front mirror, you don't use the rear mirror. I'm sure most of you must be driving, and I've been driving myself for the last 30 years. And when I use the rear mirror, I use only twice. Either somebody is honking, I always like to see who's wanted to go like aeroplane above us when there is nothing in front and he's still honking. And second thing is I always try to see when I'm going to take over, that this is somebody is coming from behind. Otherwise, you'll be always going in front. So when we are investing, why always we look only the past return? Past return, a disclaimer comes, it may not be the future. Within our own funds, I can tell you so many people when they came 2 3 years back when the mid and small cap has done very well. We were, I think, so 102 or 103 returns in a year. And few people came and I told them, please, it is already given. So you don't put all the money, don't put all the eggs in one basket. You should put it in a large and multi also. This is no, we wanted to do. And it's like this, we just go and we write a disclaimer to them that we have informed this is not with us. Being a product company, you can't do it. Of course, within a wealth company, we can at least advise, but they wanted a product. You will surprised to know within 2 years they wanted to move out. The people who chase the performance, they will not stay long. And that's one of the reason I never take a customer like that. I don't have a single customer. I always says you should have a consistency. You should make sure your returns are taking care of your financial goals. That's what we are good at. If you chase performance, you will be chasing throughout the life. You will never able because you always want 1 2 2 years. By the time you see previous 1 2 years which is doing good, that person will start moving out. So we have to look normally a longer run, have a consistency. Look, Nifty returns kind of a day. Nifty itself is a good enough because if those stocks are not doing good, SEBI itself will remove and put it another what you call stocks. And if I'm doing a rolling 10 years, it's 14, 14 and a half. If it is a market is low, you will be going 12, 12 and a half. So even if I give more than a market 2 to 3%, you should be thinking about 15 to 16% returns. Why you are expecting so much? The wrong thing is that your expectation is wrong and then you are blaming somebody else. So it's like that you're driving a car without a brake and then you wanted to say, okay, I met with an accident. So you have to realize that you wanted to drive in a 60 to 80%, which is a speed limit, or you want it in 120 130 and go to the hospital. But if you don't go to the hospital, you are happy you reached half an hour early. So these are the things which we have to start thinking, and that I'm trying to make that thinking process how to make sure that part of it. That's another part is asset allocation, where I'm trying to say that it can be anything. It can be food, it can be anything, or a balance. It makes a lot of difference. So I'm sure the good thing is happening nowadays, including me. I'm trying to reduce weight because my knees started paining. Till now, I was telling, okay, my all the whatever I do every year, the checkup is perfectly fine. But now my knees started paining. I said, okay. So first thing the dietitian came and told me the same. You have to have the balanced diet. You have to have the proper protein. You are taking too much of carb. The same thing works. So what they did, the same thing. They said, okay, what is your age? And as per your age, what is your metabolism? And as per the metabolism, what is the things you have to do it? Same thing works in this. When you are young, you can take a higher risk. Your metabolism rates are very high. And when you are not so young, what is your time you for your retirement? And accordingly, your balanced portfolio and the balanced diet change. This is the way everywhere it is that, and health is wealth, always like that. So we have to make sure that you do a balanced part of it. How the asset allocation works, I am sure first is the income and expense. So I'll give you my one of the failure is I started last year to do the coaching because I wanted to focus on the woman. So I said, okay, I'm going to focus on a woman wellness and woman coaching. So I thought I will do a free of cost coaching to make them happen as a over the 6 months, and then they will do it themselves. That how to make it they're financially fit, you can say, or financially free kind of. So after, I don't know, 47 or 50 people who enrolled, I told them, okay, I can't do 50, so I will give you the homework. And the homework was that you should tell me why I should give a coaching to you. So around 7 people came. Then I started first session, and my first session to them was very simple, which I have been doing for 30 years. But it's a very simple thing. Please note it down. What is the income and expense? That's it. First two step of this slide. You will surprised to know next month nobody came for the session. Why? I don't think so. I can write an expense. And that is the mirror. I'm telling you, if you're not doing, you please do it. You will save 40% without fail. Because writing an expense will tell you that where it went, which you don't need it, where it is going higher, so I can reduce it or find the solution how to do it. And simple example is our daughter. Of course, my mother is to write. I do write. My mother is to write in diary. I write it in Excel, and my daughter write it in app. That's a differentiation in three generation. And she came and told me when she was in India college, we give her a monthly budget, if I'm not wrong, 2000, I think so. And she came and told me, Mama, my maximum money is going only in the Uber Ola or travel, convince. I said, what I should do? So she said, okay, I will try to save it. And she started going into the what you call what is it things called where you can share taxis. So she said it takes 10 minutes more, but shared access is little cheaper. I said, okay. Then after 1 or 2 months, she still said, again, my bill is still going on after more than shared taxes also. Then I said, what I should do? Then she said, okay, now I should start going in a public transport. And she started going in an auto to metro and metro that way. And she says, now I'm able to save it. So what happened? The expense of writing itself start making you think, and solution came, and she was able to achieve what she wants to do. And that's the same concept I keep saying even in our office. The monthly report, the cadence report, or whatever report is never be for your bosses or mentors. It is for you to realize what is pending and what you really did. So same thing happened when you start writing an expense. You will realize where you have done more, where you can save, how you can reduce, what are the different solutions. Very, very important part of it. And these are the 9 parameters which comes into the play when we are talking about asset allocation, income and expense. Age is very, very big factor because if you're young, you can take more risk. And assets, returns, risk, liability, time horizons is a very, very important, which is the one of the best I can say taking care and portfolio asset allocation. Factors, as I say, if you're young, you can take a more risk. If your income is more, your risk tolerance goes high. Expense is the things when it is low, your risk goes more, so you should have a less expense. Try to make sure that we should always do 20 to 25% of returns. Make sure that you are not putting all the eggs in one basket, which is very common. It can be liquidity issue or it's a highest risk. Interest rates versus cash flows, time horizons makes a better in the compounding, and that's a way we should look at across over the period. Okay. So what is asset allocations? As I told you, it's take care of volatility, it generates the risk adjusted returns. It makes sure that you look at the long term, which is very important, and take care of averaging of the bond investor and all on it, both the side where you're taking a superior returns. I'll skip this. This is the I called as people call market return versus non-market. I call fixed versus non-fixed. Fixed returns means when you're going for investment, they will tell you in advance what is the returns you're going to get. Go to the bank, you will say the fixed deposit. Go to the GPO or post office, they'll say these are the MIS, NSC's returns. PF, PPF returns, they will tell you in advance. And insurance also, if it is returns, normally it will be a between 6.5% returns, even though it is good because it's a tax free. Non-fixed is when you're selling, you will know what is the returns. When you're buying, you won't know. And that's the difference between. And whenever you choose the investment, your intention should know what exactly? So this is the recently last Saturday itself. Somebody came to me and he says, Rachna, I've sold my business and I have 10 crore. I want you to invest. And I keep asking what you're going to do with the 10 crore. Is it something to the goal? Is it you wanted to start the business? You wanted to give to the next generation? What you want to do? No, I just wanted to invest. And I said, if you don't know what you're going to do with your money, how I am going to help you out to think long short thing. So you have to define any money. You can say appreciation is my thing. That's fair enough. Okay, you wanted a maximum return, so you just look at a 5 years or 10 years perspective. But you should know money where you're going to invest. Otherwise, you will just do it one year like a. I keep saying that is used to play in the young. No, you will have the put it in handkerchief behind, and whoever is that become tenor. Then you go to the put another handkerchief. So you'll be doing your portfolio like that. So you should know where you should keep and keep it for long. Even it's our fund, whose fund, but keep for long. That's the way you should look at. So here equity is very important because the another concept is any investment you should look at post tax, post inflation should be greater than zero. That's the way it should be. If it is not, it's your pleading, eroding your investments kind of. So the things which will give you more is always equity. Gold is good nowadays. Physical form we say not too much, but always it's a contrarian. People can take ETFs. You can do things. Commodities coming, real estate and ULIP. You have been thinking real estate is thing where you sell you will get it, and ULIP is the insurance, but unit link which is linked to the market. I have already explained you the how the asset allocation versus your risk level goes. Higher the risk, higher the returns. As I told you, most of the time asset allocations, there are different things depending on the lifestyle and the time horizons. As the time horizons decreases, your investment in equity goes low and debt goes high. That's the way it should be. And make sure you do that part of it. The investment options depends on people. When you're talking in equity, it can be direct shares, it can be mutual fund or a PMS nowadays coming quite a lot. And I can say slowly you will surprise to know a lot of people started looking on a AIF also. But yes, those are a much more higher risk. But these are the equity investment side where people have been investing. Debt side, lot of time people don't take much risk, which is the safest option people do. Normally, I say 100 minus your age should be the equity. That's the way you should look at. Bonds, when I do this, lot of people don't add their PF, PPF. You should add PF, PPF because that is a debt side and insurance, NPS kind of it. Bonds are very good. Try to get double A rated plus bonds. That's a good thing. Mutual funds, you can do debt. Quite a lot of debt funds are there. Actually, there are 12 or more different types of mutual funds debt side. Retiral very important. PF, PPF, insurance is anyway good. I normally says apart from risk insurance, which is more on talking about health insurance and term cover, you should take a good NPS and guaranteed that plans are going very good. That's a very good returns because none of us is going to get the pensions. Lot of real estate, global fund, AIF is a new things which is coming lot of time. So these are the things I'm talking about how these, apart from risk allocation, diversification, and things, how to take care of influencer. Because personally, I don't know either, neither of those. I don't know because these are the SEBI rules, so that's why we came to know all those things. How we should make sure that I'm not saying they are not good. They may be much more qualified. They may be doing, but sometimes you are impacting the mass and one of yours can impact a lot more things. So like I can say my son, because I don't know it was right or not, but Amitabh Bachchan is endorsed it and he says why not I do. So sometimes you should know and do homework when you are following. Don't follow blindly somebody like that. These are the things where recently you can say SEBI has been trying. On an average, I see SEBI bans around 10 to 12 people of influencer in a month, kind of it. But there are many more people. Now, RBI has also done it because these online issues are having their KYCs are not being normed. So you can say that even they are trying the best not to do these issues. But yes, still things are going on. They are trying the best. So you should do your own homework before we take care of it. This is the another things. A lot of people was telling me ki they are giving a training and you will get 3x, 10x. And I said if somebody knows how to make 3x and 10x, but they will not give a training for 7,000 or 10,000 bucks. They will make it in a much more million billion money. So try to have very clear because including us, I got caught maybe because in a LinkedIn, being a Wiproite and Infosys person, somebody called me that there is a fund from an RN backed and all this stuff. So I normally I don't listen, but on that day I started listening. I said, okay, tell me, respect to NRN. And then they started doing, and they said, why don't you start moving money to some UK number? And then I realized that I was also getting conned by that things. So sometimes people use your social media things and start taking emotional calls and do that. Try not to fall on those part of it, even especially on mobile and other things. Try to find it out. Our own personal things has happened. I think so. I have written the next lot of cyber criming is happening. Even the bankers know the data. I'm not saying all bankers is, but it has been happening. These are the paper clipping I have been trying to put it across. This is what happened in the Right Horizons. We have put the case to the SEBI. Somebody called us and saying that please give my money back, and I said I have. First of all, if somebody calls me, I will say that okay, I'll search my system and know who is an RM, how to do, and all this stuff. But they gave the two names and they said that's your employee, and at least I know all employees by heart. So I said no, they are not my employees. Then they gave the screenshot what they have given. So if you see that they have given screenshot of stock tradings and all the stuff, and they're given the Right Horizons name. And when they stopped it, and then this person has gone to our Right Horizons, my ID number was there, and then they realized it that it was again a scam. So I'm very surprised to know when I asked him why you didn't, when you're paying the money and this is the GPay number of that person, it is a personal money has gone, why you didn't actually put it across that nobody will get it in a directly in a GPay kind of it. You should make sure if it is Right Horizon, should be Right Horizon, or it will be some whatever the vendor's name. It can be HDFC or ICC or whatever the company name. You can't give it in a personal name, the money kind of it. This is the another things which I was started talking about lot of, because all the people who are going abroad for the education, this is becoming a biggest scam nowadays. Please try to be careful when you are going into the abroad and paying the fees kind of it. Another friend of mine, they were going towards uh, Akbarzan, if I'm not wrong, that place it's recently came, and somebody cheated them in the visa itself fees, and they have to pay three times because wherever they were paying, that site itself was a scam site. So those are the things we should always try to do. To conclusion, for a portfolio will reduce the risk, diversify, do asset allocation, risk profile, very very important. Look for a long term, do review, realign periodically. I always say is make sure always go through the license. You don't go by night by operator. There are so many, And if somebody remember, there was a orange property came, they said, okay, we will give you one Mercedes car, and I know personally that person has booked it, and that site also didn't come, and the Mercedes also didn't come, and 20 lakhs went, and that's what they did it with orange properties kind of it. Came within 6 months, they made 2,000 crore and went off. So there are many people who have doesn't have a background. So one of the good thing is somebody called me and they said, Rachna, you are been there for 20 years. So I'm not saying all new companies are wrong, but if it is not, you try to find it out. Those co-owners or directors or something, is it they are been in a market for long? Try to get it from the license. Try to, because the good thing is those license numbers and everything is actually on the SEBI website, or you can say even IRDA. So you can validate that you have a chat GPT and Google to find it out. Don't go that people say 3x 2x. This guy has told me, somebody told me 40 lakhs he gave, they are going to give a returns, and I still remembered, I said no, please don't do it, it's not right. People are saying, but there's nothing called that. After 6 months he came and his principal is gone, and now he says I will follow blindly, Drashna, whatever you say. I keep saying it's not that you follow me or not follow me, but make sure something which is extraordinary somebody is telling is something is fishy always. So you try to find it out that way. Keep the buffer in the safe investment, at least 3 to 6 months buffer when you're doing. Make sure that you have a volatility in asset allocation and invest. Don't blindly follow the influencer. That's what I can say. With that, I just wind it up, and I'll be happy to take any questions. And if you have suggestions and you have suffered, so you please let us know, so at least other can also enjoy and make sure that we don't do the same mistakes, kind of it.
Yeah, thank you, ma'am. Thank you for sharing valuable insights. I think we are already having few questions in the Q&A section.
So, first question is, if the investments are made to P2P investment and anytime withdrawal option, how to prevent the risk from P2P? So this question comes to me because P2P also is coming sort of licensed by them. So I always tell, when you wanted to try something new and do it, just try that. If something becomes zero, it should not impact your goals and portfolio. That's what I tell to everybody. I remember few customers who were in crypto and I didn't allow them to do. And I told them the same thing. You put 3 lakhs, 5 lakhs if you want. If became double, triple and all, good enough bonus. If doesn't make up 5 lakhs gone, you're not impacting your goals. I'm happy with that. So same thing I tell for the P2P also, even it's a 90% or 99% of our customer doesn't go for chit funds. But even for a chit funds kind of it or P2P, I tell the same thing. Is liquid mutual fund is better than fixed deposit? Taxation wise, both are the same. The flexibility wise, the mutual funds are always better because even if you're taken a fixed deposit, let us say for 30 days or 45 days, which may be, if I'm not wrong, 4.5 or 5. But if you remove even 1 day before, you will get cut in from interest again and then they give it. But in mutual fund, at any moment, if you take it, that's the best part of it. If the investments are made in AIF, what are the risk factors? There are many, many more risk factors. But the good thing is, of course, it is 6 years lock in most of the time. So they try to reduce it, but there are many risks because depending on the which category license you are having in AIF, Cat A, Cat B, Cat 1, Cat 2, Cat 3, depending on that. So if you tell me, I can, because it will take longer time. Now, Sanjay, you can give his number to me, or he can speak to me. There are many more risks. I don't give AIF. I don't give any customer. It's right horizon. We have a distribution of AIF for more than 10 people. It's not that customer don't have it, but I personally, of my customers, I have never given. I don't believe it in that. And because it's a locked in fund also. What is an average rate of return of a retired person if he invest with you? So most of the time, there is always a retirement rule. If you go to the US, they say 4%, and I believe in India we take it as 6%. Even though we have an alliance PMS which is used 99% of the all our customers who just go retire from corporate life, they give 3 to 5 crores, and they says, okay, Rachna, per month you give me 1 lakh, 2 lakhs, whatever amount, and we have been giving. So you may get it a more returns because we have the that's called a hybrid funds, and when we do payout, we have a 50% equity and 50% debt. So most of the time it may give you around 7.5 to 8%, but we says we should give a payout at 6%. So your capital is project intacted and it has been giving you a little bit more than what you're removing. So that's the way I always say is a 6% is a good returns to take a payout monthly basis. I mean 6% yearly divided by 12. That is the way. Hi Manoj and good morning. Do you invest in stock? Very surprisingly, people lot of don't believe it and we don't invest in the stocks. We don't have 1 rupee in the broking. We have 3,000 crores under Right Horizon AUM and AUA. We do only through PMS. As a newcomer, trading an option is more risky than trading. So again, PS Naik, as I told you, we don't do trade. We don't believe it in trade. We believe the reason is two reason. Even if we do, we believe when a person is trading, it's like a morning to evening and all the stuff they call the traders. You are surprised to know that nowadays FNO and the trading is 90%. Cash call is only 10. Overall, I'm talking an Indian market level. So a lot of people do the daily trades and FNO. And not my data, Zero Dhar's data says that 95% of their customer, it means that they are the highest in their trading, and they are saying that 95% of their customer is not loss. So that two things you can define yourself and how it works. And that also they said that normally broker make money, not employer investor. So I want you to decide instead of me telling because we don't do trade. Of course, you can buy and keep long, and that's the way all of them has made money. including Rakesh Jhunjhunwala, to anybody, whoever you think it's a rich person, either he's having his own company stocks or somebody's company stock is staying for long. What about your thought investing in a gold? Gold is good. We should invest, but normally as a portfolio, we say it's 5 to 7% is a good to go about the gold wise. Because when you're talking on a gold, people have that keeps coming. Okay, this is the same as thing. You have to take care of your making charges. You have to take that. The reason is gold has done good. Maybe sometimes because the currency conversion comes. Otherwise, it is not even uh, two-third of that. Okay, so that's a way as a portfolio wise, you should go for 5 to 7, maximum 10, not more than that. But yes, it is good. Next 5 years, which asset allocation we are looking more on, we are expecting maybe a little bit volatility before the it goes. Of course, we this decade we feel it's a multi-bull run, but next few years we are looking more on a multi and large cap side. Do you advise investment or retirement person in fees? Yes, Jitendra, if you can, I think so. I will ask Sanjay to give my number. I'll be happy to explain you. But on an average, I can tell you how wealth management works is normally is a 1% fees. Either I get the similar fees from the brokerage or we call it distribution fees. If the distribution fees we are not taking means the funds which is gives a zero brokerage, we take a fees of 1%. That's the way normal fees is all about, but of course it depends on what mutual funds what you are taking, so fees differs. I'm talking about an actuals, but yeah, so depends on people to people on the what funds they are taking. Higher consistent returns, normally I say it's a better to take it 2 to 3% higher than the whatever nifty benchmarks you can think of. That's a way to look at, and look 5 to 10 years. If the investments are big in a big builder for commercial property rental or this due diligence, yes, we are having a real estate in right horizon in 2010 to 12. Similar things, same 15%. We are still having the case going on to recover. And that's the one of the reason I can say failure in our 20 years where they cleared two of the funds and third is still got stuck. So there is a lot of liquidity, even though we have the 2x of the mortgage and all, and because to do the mortgage through and then do it is from custodian. So there is a case going on to recover also. So it takes a lot of time, the cash flows and things makes a lot of difference. How to invest in US stocks? There are many more portals are there which gives the US stocks, but I always believe nowadays we are very bare on the US, and the people whom I've been speaking with a lot of US people, they're also on the cash now. So it's better we should look more on Indian side. PSNAC, we moved hybrid. Small mutual fund last 2 years given a very good return and trend. Yes, we feel the middle small cap has given very good last 2 years and maybe still is a gap to look for 1.5 years, but longer run is that part of it. Do you provide senior citizen? Yes, Shruti, we do provide, and our alliance fund itself is uh, to give a brief about Right Horizons. Me and Anil, we both are from Wipro, and he quit Wipro and joined Right Horizons. Of course, he was in Wipro Finance, and I was in a pure IT tech side. I was in a, I can say what we called technology making side kind of it. So I was in account management, project management kind of person. So and then I joined Infosys. So most of the people are batch of those where we all got at ESOPs and same age 50 on. So people do invest and they come out from the corporate and they take care of the payouts, which is one of the biggest service what we do. With this, I don't find any other things. I'm happy if somebody wants to share there and give me the feedback how I can improve because this is my first thing on the safe side. My intention is how to save even 1%. I'll be happy because when the people comes and tell me, I feel very helpless, and that's what I'm trying to do.